What's going on, guys? Welcome back to another video. And in this video, I'm going to be talking about some of my favorite SPACs from various sectors. Now, I know that there are a lot of SPACs out there and there's a lot to sift through. So I'm just going to mention, a few that I generally keep up with and actually do think will do well in the long term. And if I don't mention your SPAC, feel free to drop it in the comments. And, I'm sure it's probably a great play as well. So before we get into it, if you don't mind dropping a like and hitting subscribe if you enjoy these videos, really helps out the channel. And then check out the links in the description to the free Discord server, the Patreon if you want to sign up for that and do market updates in there, options plays, and just overall buy alerts, as well as the Webull referral link if you want to sign up and get some free stocks. Now let's get into it. First up is out of the EV sector, and I'm picking ACTC, which is Proterra for my pick. They're currently sitting around $19.90. I think this is a decent spot to pick this one up at. Now, ACTC Proterra is a high-growth commercial electric vehicle technology leader with over a decade of production experience. The company has designed an end-to-end flexible technology platform that delivers world-class performance at a low total cost of ownership to OEMs and customers. Proterra has 3 complementary businesses, and I like that they have a proven track record and product on the road, especially after all the allegations against Lordstown Motors, Nikola. I think investors are a bit cautious of investing in these EV SPACs right now, and I think that the fact that they already have that proven product is a huge bonus. Now, as things move more and more towards EV in the near future, I think Proterra will continue to be recognized as a big player more than they already are. Some bullet points that I liked from their presentation is that they're delivering industry-leading battery systems and electrification solutions to commercial vehicle manufacturers. Proterra Transit is the leading North America #1 electric transit bus. Proterra Energy is offering end-to-end turnkey charging and energy management solutions. And when it comes to their growth and financials, they're looking at 68% compound annual growth rate over the next 5 years. They have 750 million orders in backlog, and they're looking at 20% EBITDA margins. I really do think this one's a solid pick, but some notable mentions would be CCIV and NGA. Next up, still relates to the EV sector. However, this touches more on charging stations, and my personal pick is TPGY, which is EVBox. EVBox has been a pioneer in the electric vehicle charging industry, developing and launching innovative software propositions along with their award-winning charging stations. It says here that they are now scaled for further global expansion and ready to take on that leading role in the anticipated acceleration of EV adoption, as our world gears more and more towards that EV future that everyone anticipates. So they're currently sitting around $21.91, and I think that's a decent spot to pick it up at if you have that long-term outlook. Recently, when they sold off to that 16 to 17 range, that would have been a very nice spot to pick it up at, so congrats if you did. Now, some things that I liked in their presentation. Their 2020 revenue, $85 million, so they're making money. Projected growth in 2021 of 72%. Charge ports delivered 2020 year to date is 190,000. They're a current market leader in Europe, and they have a partnership with ChargePoint that allows drivers to roam between the 2 stations. And a random catalyst that is, a positive is that Jim Cramer does like it. So there's potential that we get more mad money action for TPGY in the near future. Next up relates to the cannabis sector, and that is SSPK, which is Weedmaps, currently sitting around $21.84. Now, last week, they did sell off to around 17, which is a pretty solid place to pick this one up. I like it better under 20, but, long term, I still think this current price is decent. So they're essentially a data hub for dispensaries where people can either place an order for pickup or delivery in legal areas, of course. So dispensaries do pay big money to be featured on Weedmaps. They're a leader for e-commerce and advertising for the entire cannabis sector. Their revenue forecasts show that they are looking to grow at an annualized 40%, EBITDA at an annualized 55% through 2023. They generate $1.5 billion in gross merchandise volume alone. They operate a high-margin marketplace service that many use today. And as this gets legalized all over, eventually their business will grow faster and faster, and that will act as a catalyst for this company, in the coming years for each place that gets legalized. Now we are hopping into the Fintech sector, and I have 2 picks for this one. First one is IPOE SOFI, and if you guys follow the channel, this is my favorite SPAC. This is a one-stop shop for all finances, and a winner-take-most opportunity is what they're calling it. Now, I'm not going to talk about them too much because I did just make an entire video on them, but I will mention some notes. So they're currently at 1.7 million customers, and they're on track for 3 million by 2021 estimates. They also take up 90% of new neobank accounts opening in the US. They're estimating 43% compound annual growth rate over the next 5 years. They're climbing up rankings in the App Store as more and more people are switching to their platform. They should be getting a banking license in 2021, which will help them continue growth ahead. They've been mentioned in multiple Motley Fool articles, as well as on Mad Money as one of the top SPACs right now. They're currently sitting around $19.39. I do like this under $20. I'm long term on them though, so keep that in mind. And the recent sell off to the low teens is where I really was building out my position heavily. I'm not adding any more at the moment, but if they did pull back again, I would consider adding again. Now, we should have a merger announcement in early April of when the vote is, and I do believe we'll get some more PR from the company and CHAMATH, which will help put more eyes on this as well. Now, the biggest risk for SOFI going forward would just be the competition in the entire fintech sector from companies like LendingTree, Square, PayPal. So that is what they have to deal with, but I do see them as a great company long term with a lot of growth ahead, and I'm very bullish on them. Second up for the fintech sector is BFT, and that's PaySafe. Currently sitting at $16.51. They had a great day, up 10.8%. And if you pick this one up on the last pullback when the entire market sold off, that was a great time to buy as well. They went as low as $12.50 actually. So their merger vote is on March 25th. So it'll be interesting to see if they get some more PR and news before that and some more attention. So PaySafe is the number one in the iGaming eCash network segment. Customers for this include Fortnite, Twitch, Spotify, and many more. They hold the number 2 market share position in the global digital wallet market. The company's digital wallet is in over 120 markets and has customers like DraftKings. The company has 3.8 million active users for its digital wallet segment. And this iGaming segment and market volume is going to increase rapidly in the coming years, giving them a larger total addressable market. So the company estimates that its 2021 payment volume will hit $103 billion, with revenue of $1.5 billion for fiscal 2021. Now, a couple things that concern me is that PaySafe said their revenue will grow at a compound annual growth rate of only 11% over the next 3 years, which seems a bit low to me, as well as the pipe investment is pretty large, so you could see a huge sell-off when the pipe lockup ends. But overall, I do like PaySafe. I'm bullish on the company, and I'm excited for this merger to go through and see how the market reacts to it. All right, now hopping into clean energy, and my pick for this would be STPK, which is STEM. Now, they are still down quite a bit from their highs. They were recently, around $50. Today, they're sitting around $33.99, and on that last sell-off, when the whole market sold off, they went down as low as $20. So I see a lot of upside with this one. It is a bit pricey for a SPAC right now, but something to keep an eye on. So STEM is a global leader in artificial intelligence, AI-driven clean energy storage systems, which allows users to automatically switch energy usage between battery and grid power based on artificial intelligent platform dubbed Athena. The global energy storage market is expected to increase approximately 25-fold by 2030, driven by the convergence of two technologies, low-cost renewable generation and rapid reduction in battery costs and improving efficiency. STEM's energy storage system addresses a $1.2 trillion market opportunity and offers investors a unique opportunity to invest in a pure-play clean energy company, helping to revolutionize the electric grid. Some highlights from their presentation: STEM expects to generate revenue of $147 million in 2021 and to be EBITDA positive in 2022. They have a large addressable market. Their balance sheet is well positioned to capitalize on growth. And the only negative thing recently is that their merger is now going to be delayed until early Q2, which caused a bit of a sell-off as investors do get impatient with SPACs nowadays. But this could also be looked at as a positive if you still needed to build out your position and if you wanted to add more at these prices. Last up has to do with the iGaming sector, and my pick is DYMD, which is Genius Sports. This is a pick and shovels play for sports betting. They're currently sitting around $17. Now, Genius Sports captures and provides sports stats, data, and technology that powers sports betting platforms such as DraftKings and FanDuel on behalf of professional leagues. The market is growing at over 25% annually. More states are legalizing sports betting, serving as a major growth catalyst for companies like Genius Sports, DraftKings, Penn, etc. They have 7,000 statisticians and agents on the ground, managing 240K events per year. They have long-term contracts with sports leagues and customers. Touching on their financials, they already make $140 million in revenue, and they're profitable with $14 million in 2020 EBITDA. They're growing at a 30% compound annual growth rate with $230 million revenue and $68 million EBITDA by 2022. They have $500 million plus EBITDA potential on the horizon as this sector continues to grow. Customer contracts have guaranteed minimums with upside usage. The majority of their 2020 revenue is locked in for 3 to 4 years on average, and they've only ever lost one customer in the past 3 years. So that's pretty much it, guys. I just wanted to touch on a couple of SPACs that I have been watching and I do see a lot of upside potential with in the future, whether that's, pre-merger, post-merger. I think a lot of these will do well. Now, I was going to touch on the space sector, but I just don't feel knowledgeable enough about space to really touch on that. I do think HOL, which is Astra, and SFTW, which is Black Sky, are very interesting SPACs. But like I said in previous videos, I'll probably leave picking space stocks up to just ARK's ETF when they come out with it, and I'll check that one out. Couple other really cool SPACs I like are A1, which is Mark Forged, as well as Matterport, which is GHVI. Now, if you guys like any that I missed, feel free to drop them in the comments. If you enjoyed the video, please like and subscribe, and have a good one.